hurdle number 2. And if you get to a point where there's no conditions surviving to give you a concern, like, hey, the only things left are, hey, I got to give them an updated pay stub or an updated bank statement. You say, I'm not worried about that. Then you're good, okay? So as long as there's no conditions that give you pause or concern. Hurdle number 3, appraisal, okay? Now, the appraisal generally happens a little bit later in the game. Like I said, you wouldn't even want to order it until you know inspections are good, okay? Now, the appraiser's got to go out there, do their job, submit a written report to underwriting, and they need to review it in underwriting. There's a chance that it emerges out of underwriting and there's a hiccup. Perhaps the value is not there. The market valuation came in below the purchase price as incorporated into your contract. That's a problem, okay? Or maybe there's one or more required repair items that were noted. And they say, you know what, we think it's worth the purchase price, but only if this repair or these repairs are completed before closing. And now they got to be completed or you do not close. That's a problem, okay? Now, with respect to repairs, generally not something you're going to see with a conventional loan, okay? Once in a blue moon you do, so I don't want to say it's never, but very, very small percentage of conventional loans have any reference whatsoever in the report to repairs. Just don't see it much. However, government-backed loans, FHA, VA, USDA, very common. Okay, they love to point out minor repairs like flaking and peeling paint and missing handrails. Those are their 2 favorites. Now, it could be other things, but if they raise those issues, those are repairs that need to be completed before we can close. Now, we can always ask the seller if they would be kind enough to complete those repairs. And once in a blue moon, you get lucky and you get a seller that says, oh, sure, absolutely. It's usually that retired handy guy who says, oh, I love to help these young people. Yeah, I'll do it. Or maybe you entered into a contract with a LLC or a corporation who's doing a flip. They purchased the property a short period ago and they're improving it for sale purposes. So they've already got the working knowledge and the tools to do repairs. So in those limited circumstances, you may very well get lucky enough that they're going to do it. But I can tell you in the overwhelming vast majority of instances, the sellers say, absolutely not. In fact, you'll probably notice in their attorney approval communication at the very beginning of the deal, seller's counsel is already putting language in there saying, hey, we're giving you heads up right now. We're not doing any FHA related repairs, for example. Giving right out of the gate, they're telling you it ain't happening, okay? Now, in those circumstances, guess who has to do those repairs? You do, okay? And what happens is we have to get together what's called a written hold harmless and indemnification agreement with the seller's counsel that basically just suggests, hey, listen, in the unlikely event that somebody gets injured while we're on site, we're not going to sue the seller or go after their homeowner's insurance, okay? Otherwise, they're not going to let you on their property. Once we have that in place, you can go over there, either you personally and or your contractor would have to make those repairs before we can move forward, okay? And one of the things we probably want to talk about, and we will talk about, is do we want to put a monetary cap on that amount so that, God forbid, hey, we got by inspections under paragraph 20 of the contract, inspector didn't call out the roof. But for some reason, the appraiser's saying, got to get that roof replaced. Oh my God, Brian, that's like a $14,000 fix. I got to do that? Oh, yep, you do. Okay, so I have to be, again, the doom and gloom guy who has to anticipate the worst case scenario for you, and that is that you're saddled with some exorbitant repair. So one of the things we'd want to talk about in that instance is whether we want to cap your financial obligation, whether that's at $2,000, $2,500, $3,000, whatever the number might be, whatever you're comfortable with, we'd want to cap that, okay? But just know that the appraisal could be problematic, okay? So whereas there may be some mortgage loan professionals that say, hey, commitment letter is the end all, I'm telling you that the commitment letter in and of itself is not sufficient, okay? You need to get those conditions satisfied. You need to get by the appraisal before you should be comfortable. And quite frankly, you want to make sure that your mortgage loan professional is also very keenly aware of what the tax bill is for the property. Okay, because I've seen deals unravel, not many, but I've seen it, where the mortgage loan professional late in the game gets a copy of the actual tax bill, and they say, we got a problem, because we based the debt to income ratio analysis on the estimated tax figures that we got at the beginning of the process from the real estate professionals. However, now that we're looking at an actual tax bill, we see that the seller was entitled to various exemptions, which serve to diminish their tax burden. Exemptions that you're not entitled to. So now we got to take those money, throw it back on top. Now the actual tax bill much higher than we anticipated. That too could throw your debt to income ratios out of whack, which could be problematic for you. So I want to make sure you understand conditions, appraisal, tax bills. These are things that can unravel financing later in the game. Okay? And if the bank comes back and says, hey, listen, man, I'm very sorry, but based on this new information, I must regrettably withdraw, take back the commitment letter that we issued earlier and declined to finance, now you're in trouble, right? And God forbid you listen to that one mortgage person who said, Rohan doesn't know what he's talking about, get rid of that contingency, you already got your commitment letter. Now, if you got rid of that, and now they're taking back the commitment letter that they gave you, now you got to drive to Cumberland Farms, feverishly scratch lottery tickets until you hit pay dirt, because you're locked in to buy the property, but you're not getting a mortgage, okay? You do not want to put yourself in that. So I do appreciate that the mortgage, you're kind of walking a tightrope, I get it, because you don't want to overstay your welcome, right? You don't want to drag it out into perpetuity because the seller is going to kill the deal on you, maybe, right? You don't want that. But you also don't want to prematurely remove it, and then God forbid the financing unravels and you're left holding the bag, okay? So critical that you understand that, okay? So when you get the email out of our office that says, hey, date's here, are you good? Can we allow that contingency to lapse, expire, fall out of your deal or not? You got to let us know, right? You're talking to your professional. Is it, hey, Brian, I need 1 week because the appraisal's in but hasn't been reviewed. I need 2 weeks. You're having this dialogue with your mortgage loan professional. You need to know where that financing stands. You got to give us direction, because we know that once we ask for an extension, the seller's attorney is going to say, what's going on? Is there a problem? Why do we need an extension? We need to know the particulars to give them some comfort level so that they kind of sit back and relax, right? We don't want them yanking the deal on you. But we also need a time frame from you, so we know how far to ask for an extension out to, which hopefully the seller is going to grant without issue, and then we move forward. Okay, so you're part of our team, right? You need to be all over this, and we need to keep the dialogue open. Okay, and as usual, if you have any questions whatsoever regarding the mortgage contingency or inspection, anything on the contract, please don't hesitate to call our office, fire off an email. Phone number here at the office, area code 518-438-0010. My email, brohan, ROHAN, @rohanlaw.com. Or, of course, you can find us on the web, www.rohanlaw.com. Okay? And if you want, again, trusted, experienced legal representation, if you want the personable service that you deserve, responsive service that you deserve, look no further than the Rohan Law Group. We are the trusted transactional titans.